Team B, you can start whenever you're ready. We'll start the time when you begin presenting.
Imagine going on a road trip and you're running out of gas. You need to fill your gas and see a green sign. This is PTG, a secondary road companion. We're Team B. Good morning, distinguished audience. PTG operates in the oil retail business, serving 7 oil products to mainly diesel-based vehicles on secondary roads, while expanding into other 6 non-oil businesses. Being the largest number of stations, PTG has integrated 3 growth strategies beginning from its horizontal integration to backward integration, while supporting imagined growth by diversification to non-oil businesses. Using the weighted DCF with EV EBITDA, we provide a buy recommendation with a target price of 22.5 baht with 16% upside. And why should you buy PTG? With the power to drive the current price.
The first key growth driver is the post-pandemic opportunities. PTG's businesses are affected by several economic indicators. These indicators will grow in the future, and here's why. The world economy will recover from the distribution of COVID-19 vaccines. Moreover, OPEC has an agreement to reduce the amount of crude oil produced per day. As a result, the crude oil price will increase, and so does the marketing margin of fuel stations. How about Thailand? We will experience a jump in GDP from the government stimulus and gradual increase in tourism rate, as well as the boom in e-commerce leading to a growing logistics business and increase in oil demand. From economic recovery, biodiesel demand will increase from the growing numbers of diesel-based vehicles and the mandate from government to use B10 with a potential increase following Malaysia and Indonesia. The government also encourages truck drivers to use B20. Lastly, the non-alcoholic beverages consumption is expected to increase steadily, especially coffee consumption, which still has high potential growth, leading to an opportunity for coffee shop businesses.
The second key growth driver is ongoing competitive advantages. PTG focuses on cocoa stations, while peers focus on dodo, resulting in a high agility to respond to customers' needs. For example, PT Max service can help deliver emergency oil and offer 24-hour repair service. And thanks to the cocoa base that help reduce the cost, create a lower fixed cost per liter, result in a cost competitive advantage. While competitors expand the station in the city, PTG expand the station from 4-digit to single-digit growth, focusing on agricultural vehicles and trucks, and expecting to have more than 3,000 stations as PTG choose to reach the aging contract and unprofitable station, require less cost and take less time. PTG also owns the most distributed 10 tank farm across Thailand. And to become the part of customers' life, this is PT Max Card with 15 million users and a growth of 2.5 million users per year, giving the best deal for diesel-based customer at 1 point per 1 liter, which is the highest among competitors. PTG also stands above water in biodiesel industry and is produced the purest B100 and the location in Prachuap Khiri Khan, stay among suppliers and get benefit from two-way tender. Our analysis confirmed with the team's customer survey and just the survey result with the SWOT analysis. We ensure that PTG's market share will continually move up in the future. What about company's growth plan? PTG aims to expand the station in the city, vicinity, and along the highway with its non-oil businesses.
The third key growth driver is wealthy financial performance, starting with profitability. The rising revenue projection is driven by horizontal expansion, both cocoa and dodo-based station expansion, and higher sales volume per station from higher customer awareness, and also expansion of non-oil businesses. All these drivers is supported by PT Max Card, and for higher EBITDA, is driven by light asset strategy and lean business model, which lower the fixed cost per liter, creating economies of scale. The net profit of the company is high by cost competitiveness, business agility, and non-oil businesses margins. Not only that, but PG will also receive 4% net profit sharing from biodiesel business, supported by positive elements. ROICs of the company are higher than WACCs, indicating that the company has sound growth strategy. For increasing efficiency, we forecast PG to have the best efficiency among peers in terms of using assets to generate sales, thanks to economies of scale. Lastly, leverage. PET plans to lower debt equity to be at industry average, contributing to stronger balance sheet. Moreover, its cash operation will be enough to support a significant payment. And lastly, it will continue having high liquidity from negative cash conversion cycles. After we know PET is a good company, is this a good investment?
We consider PTG as a good investment, supported by averaging 50-50 of the consolidated EV/EBITDA multiple with the sum of the part DCF to get the target price. Let's start with the sum of the part DCF. We calculated the price per share from 6 businesses and broke down the revenue into each segment where we forecast each oil product separately. For example, Gasohol 91, we calculated each component of the price structure by running a regression on the ex-refinery price and the marketing margin. And we also run a regression on the market volume sales to multiply with the market share based on the team survey and the SWOT analysis to get the company's volume sales. The new station sales is also driven by the store expansion based on the management guidance. And we also double-check the plausibility by using the Google map to navigate the substantial leasable stations and to minimize the cannibalization effect. Moreover, other corresponding elements are forecasted to be in line with the sales. Bottom-up betas were calculated based on their peer groups, resulting in different discount rates, and the terminal growth rate of all businesses are assumed to move towards Thailand's long-term inflation. And we arrived with a DCF value of 20.6 baht. And to support our DCF, our sensitivity analysis shows that even the change in the terminal growth rate and the discount rate, there is still a cushion to change the recommendation. Another 50%, we use the consolidated EV/EBITDA multiple to get the relative price of 24.2 baht. The statistical relative is done to mitigate a lack of direct peers, and it shows a higher multiple than the current EV/EBITDA, ensuring that the stock is highly underpriced. Moreover, the stock is currently traded at all multiple levels being lower than the historical average, a strong signal suggesting a buy. After weighing both valuation, we got a target price at 22.5 baht, with the 1-year total stock return of 26.8%. Moreover, the maximum drawdown during the COVID-19 lockdown has been recovered faster than peers due to PTG's defensive target customers, the dispersed stations, and a recovery in oil price. But will PTG be able to manage their risk?
Amid the good stories, we assess the risk using stress tests and highlight on 4 factors. Firstly, PTG faces the fluctuation in fuel demand from the pandemic. However, the demand has to fall below 15.2% to change the recommendation. Secondly, the government interventions impact commodity prices, but there's still a lot of cushion to change the recommendation. The third factor is the marketing margin volatility to global crude oil price. PTG reduces the impact via inventory management, showing a large gap to change to sell. Another concern is the rising trends of EV cars. Yet, PTG uses the agile business model, leaving a 31.7% cushion. To complete our analysis, we ran 250,000 times of simulations and still resulted in 61% upside.
Many traditional ESG activities have been implemented to conserve the natural world and also consider the social relationship. For example, the palm complex produce biodiesel using European standard with lower greenhouse gases emissions, as well as Rathai, which is an online market platform for local people, and it has helped to develop the marketing strategy while still at the beta stage. Moreover, 5-star CG score from IOD and team estimation using CFA criteria show a high standard for running the company. As a consequence, PTG can lower WACC by 6% based on the past study result. Those great performance have been confirmed by THSI Award for 3 consecutive years.
With PTG's strong fundamental, we issue a buy recommendation with a target price of 22.5 baht. Ladies and gentlemen, in the midst of the crisis lies great opportunity. Thank you. The floor is now open for the Q&A session.
All right, excellent presentation. Let me start off with, if I looked at your revenue, long-term revenue assumption, it was 6%. If I looked at your long-term EBITDA assumption, it was about 6%, which tells me that the margin is not widening. It's going to stay flat. So that tells me that the margin may be at a peak So the second, combining that with your EBITDA multiple, you're showing that your target multiple is almost double what the market multiple is. It seems to be a contradiction. Can you try to explain that? Thank you.
First of all, the EBITDA margin is rising compared to the revenue, although we use the number 6%. However, in terms of decimal, it is increasingly, gradually increasing. And these two numbers are different. And in terms of EBITDA,
Sorry, but you're still talking about a small difference, right? Or are you saying that that's the wrong number, the 6 and 6? You're saying it's 6 point something, correct?
correct.
Okay, continue. So the multiple, so what I'm saying is that it appears that the multiples, the margin is not really expanding, but you are expanding the multiple, you are expecting the multiple to expand. And that's part of the foundation of your argument. I just want to understand, why do you think the market is saying it's trading at a lower EV to EBITDA multiple than what you're expecting? Let us understand about it. Again, like all the other teams, you've done more research on this probably than anybody in the market. So just tell us what you're thinking.
The market EV/EBITDA is because it's the reflection of the environment into marketing, in the marketing of the stock price. However, with our analysis, we use this based on the long-term strategy of the company. Hence, our EBITDA will be higher because we take the long-term growth and also of the FCFF and also the risk of the company into our valuation. Hence, our we firm with our buy recommendation and also higher multiples.
Okay. Among the ESG factor, which one do you think is the most outstanding for this company, for your opinion?
Thank you for the question. So in terms of ESG, we expect that the corporate governance is the most outstanding, as we can quantify into our model with the CG adjusted WACC. Through this research,
you guys are well drilled. I think it's part of the game plan, because you have to finish everything in 10 minutes, right? But again, this feels like it's too well drilled, right? When I ask questions, right, the first instinct that you guys go to is like, I'm gonna find this slide in my appendix, because I prepared this set of questions. If I get asked this topic, I'm gonna show this, and this is what I remember when I practice the way, this is supposed to be the way I answer it, right? But again, right, please pay more attention to the questions of the judges, right? What is he? What are we looking to see? Right? What are we trying to ask? Right? That is very important.
Thank you for the presentation, and very good comprehensive presentation, and I love your team energy. It's very good. And again, same as Kunjia said, when you answer the question, please improvise the answer, not give us the set of the answer. Okay.
All right, and a couple of things. Just look at where you're standing on the stage. You cannot get further away from the judges, right? Or else you'd fall off the back. But when you do Q&A, you should be trying to engage the judges. Don't be afraid to come forward. Why don't you come forward right now? Just come on, come closer. Yeah. So you want to try to engage the judges when they're asking. We're trying to get our questions answered. Also, I think you've got to avoid saying the word will. Remember, in CFA ethics, we also talk about separating fact from opinion. And ultimately, it's someone's opinion, even if it's an authority, like the World Bank or something like that, that it's just that they are expecting that the economy is going to recover, not that it will. So be careful with that. I like the way you showed the max card, and that's fun. Judges want to have fun, right? We want to have fun in a presentation. And I thought your risk discussion was very, very good. So those would be some of my feedback.
Just sharing with a level of detail, and some slides I think are good. Some are a bit too detailed. I think slide CD1, is it? That I can't even see from here. The revenue forecast. Yeah, that one. That is challenging to me. To say. It overwhelms, but yeah, just it's impressive. Yeah. Just balancing the message and with you want to show on the slide.
Actually, on the Q&A, I think I noticed one thing that is very positive. Is you stop your friends. That is good because your friends is not answering the question at all. So you actually listen to the answer of your friends, and this is a team performance, right? You guys win together. So if it's important to listen to what your friends are answering as well, and if it's not the right answer, it's the right thing to do. Don't great guy or something like that.
And one other thing is, one of the risks you face when you value a company that has a high amount of debt is that the debt as a percent of total capital is very high. And many people make the mistake of carrying that high debt level all the way to the future. And as a result, their weighted average cost of capital is very low. And that was going to be my last question, but you got saved by the bell. So that's just a risk area. If you win and you go on, you better be ready to answer that type of question about the WACC and the cost of capital.
Okay. Thank you, judges, for your feedback, and thank you, Team B, for the presentations. Now let's have some 15 minutes coffee break, and we come back here again at 10:20. And Team B, you can stay after the break for watching other presentations.